of the day, though, we can't go past the Soul Pattinson Perpetual Tango that has started this morning. Shares are firmly in focus after Perpetual rejected an initial $3 billion proposal from Soul Pats, while confirming confidential discussions took place when the bid was lodged back in November. It says the $3 billion offer not in the best interest of Perpetual shareholders, telling shareholders to take no action in response to the proposal. Perpetual says the board remains focused on delivering shareholder value. Soul Pats is Perpetual's largest shareholder. The bid calls for Perpetual's asset management business to be spun off and distributed back to Perpetual's existing shareholders. It says Soul Pats believes the complexity of the Perpetual group, together with the current market backdrop and high financial leverage, is weighing on the share price and constraining Perpetual's strategic flexibility. So Perpetual is saying Soul Pats got this wrong, Ben Clark, that there's nothing wrong with Perpetual. Who would argue with Soul Pats though?
Be a brave man to argue with Rob Milner.
Exactly.
The Newington College is finding out at the moment. But look, I it's an interesting move. This sort of blindsided me yesterday because Soul Pats has been one of our biggest holdings for years. Yep. I can see the logic in it. So what Soul Pats are after isn't the fund management stuff that we all see and talk about. They're after the trust business, which is a very resilient business that would probably trade on a much higher earnings multiple if it didn't have the funds management stuff interwoven into it.
And a trust business is basically how Perpetual started.
Exactly, Perpetual trustees.
Yes,
yeah,
exactly.
Yeah, and that they morphed into something over time.
Yep.
So, a lot of fund managers and a lot of wealth managers use Perpetual as the trustee of their assets. Yeah. And as more and more assets keep getting pumped into there, the pool of these assets continues to grow. And it's a very, there's only 2 or 3 companies in the country which really have the scale to compete. So it's not a lot of competition, you'd say. And then they're after the wealth management part, which was sort of interesting to me as well, because, I think there's been quite a wealth, it's an interesting I'm in, and we've seen the Liechtenstein government has bought Crestone, which is one of the biggest players in Australia these days. Right. And there's been some pretty big moves in the industry. I think everyone can see that this is an industry primed for growth. And then, what Soul Pats are saying is the funds management part, which has been, there's a lot of debate about it because there's been a lot of takeovers.
Didn't they buy Henderson Janus?
No, they bought a US value manager, and then they bought Pendle.
Pendle.
Merged with Pendle, but it was sort of a...
Yep.
And even I think the fund managers at Perpetual didn't like any of those deals. They've got this weird... Funds management's very difficult because you've got guys like Paul Scamaragis who he's left, and these fund managers hold a lot of power in the companies. And Soul Pats is effectively saying we'll give the funds management company back to the shareholders as a standalone business.
Right. And so spin the fund management out into a separate entity.
Demerge that, the shareholders retain that, and Soul Pats takes the other 2 parts, which I would say are the jewels in the crown of the Perpetual business.
Okay. So
where does it go
bottom
from
line,
here?
Soul Pats.
Yeah.
You've been a big supporter.
Yep.
Still a supporter.
Absolutely.
Soul Pats still a buy at this.
Yeah, I went to a conference that Rob spoke at mid-year. They've got about $1 billion in cash on balance sheet. He alluded to the fact that we think there'll be a deal done before the end of the year. I reckon he's been looking at this for a while. Right. Now that we've seen this. Perpetual, very quick to disengage, launched a strategic review. So they're kind of saying, we'll try and do this ourselves. Right. Soul Pats is the largest shareholder of Perpetual. They own 10% of the stock, so they'll have some say. See where it goes from here. I mean, they've refuted it.
Are you a buyer of Perpetual?
No.
Right.
No way. No.
Right.
Buyer of Soul Pats. If it gets sold down a bit on the back of all of this, definitely keep your eye on it.
Okay, look at that Perpetual price there.
If you went back 5-10 years on Perpetual, it's been a shocker.
Right.
I remember it was $40 probably 15, 20 years ago, and it was $70 at some stage before the GFC.
Wow.
Yeah.
Okay.
So hasn't
there
done
we
a lot.
go.
There you
There's the 5-year graph, 45 just before the pandemic.
And you sort of think where it would be if this hadn't broken out. You know, you're basically
5-year lows.
Yeah. Yeah. Exactly.
Okay. And they're saying they think it. Thanks very much, Soul Pats, for pointing this out to us.
Yeah.
We think we can do it ourselves, but
Yep.
the question is, well, shouldn't you have come up with this yourself?
Yeah, and a debate will be what's the Soul Pat's share price worth, and I'm sure Perpetual will start to flex this, because if you're getting the bulk of the money is getting paid with Soul Pat shares,
Right.
so
Right.
you know, they would need to hold up for the value to
Still
remain.
to go through.
Yeah.
Right. Okay. Grady, what's your view on the deal and each of the stocks?
The deal is definitely in favour of what obviously Soul Pats, because they're taking the two best assets out of the Perpetual brand. The funds under administration of the corporate trust business actually had a takeover offer from a Japanese company last year, and that was rejected obviously on the grounds of value. And that is the growing part of the business, and it's the stickiest part of the business, because once it's a really hard and tedious process to get the companies in and their corporate trust in, and once they're in, they don't really leave. So this is a growing market, especially in the US. So the fact that Perpetual has it is a really strong part, but obviously Soul Pat's absolutely wants to take it off their hands. Leaving the assets under management for Perpetual is, again, the shareholders probably won't be too happy about that, because they're losing the two biggest parts of the company to Soul Pat's. We're still really bullish on Perpetual, because it's obviously got the new management team, which is an entrepreneurial focus, and we've kind of run the microscope over this company recently, and we're really bullish on them because the new management is really entrepreneurial. They've got a focus of tailoring their products to their services and funds, obviously to what clients want and what investors want, which with a lot of fund managers this year, we've seen them obviously sold off and really doing it tough in this environment, because investors want to see where their money's going. They want to see a personalized approach, not a one size fits all. And that's where Perpetual comes in really strong. They've kind of taken a strategic review and gone, we're going to go with a client first approach, and that's exactly what they've done. Obviously the Pendle acquisition was good as well. That brought in a lot of funds under management, made them a massive player in the field, and so naturally
why is the share price though at 5-year lows if everybody loved those acquisitions?
At the moment, they're looking. Well, what we saw is that the acquisitions recently, we're still waiting for the benefit of the acquisition with Pendle to come through. So that's kind of taken place over the last 6 months, and over 6 months, it kind of takes 6 months for the benefits to fully be seen and known with any acquisition. So we're expecting FY24. So the results in the last quarter or FY23 for Perpetual were disappointing, and that's exactly what the Bell Potter analyst said. But we're expecting FY24 and beyond to be where we see the exact benefits of these acquisitions to come through.
So what's your view? So you've got a buy on Perpetual by the sound of it.
Buy on Perpetual.
On these lows, what about Soul Pats?
Yes, Soul Pats is a buy as well. We don't cover it, but looking at this deal and looking at everything that's coming through for Soul Pats, if they get this done, that makes them a major player in the corporate trust market. So definitely what you want to see. And obviously they're a massive company, diversified across all the different areas. They've got the thermal coal exposure though, which obviously naturally we've seen come down in recent times as the world turns to this green energy transition. So we might be seeing a bit of transition out of thermal coal for Soul Pats. But again, they've got Brickworks, they've got Boral, they've got everything. So they're a massive company. They've got New Hope Corporation, Aeris Resources, they've got their own funds management. So yeah, they're a massive company. They're a major player in the market. And if they do get this across the line, they'll be even bigger.
Okay, all right.